Welcome to the Snapshot edition of the Daily Video Update. This is being prepared Wednesday, April 13th, where we'll briefly discuss the action in the market today and then see how things look briefly for Thursday, April 14th. And we saw a rebound. Now, in yesterday's snapshot and full daily video, I did say that some of our indicators, especially some of our short-term indicators, had been giving us some short-term oversold conditions. And to see a bounce would not necessarily be a surprise. Well, that's what we saw. We saw a decline in interest rates on Wednesday. That gave growth stocks a little bit of room to run. You had some buying the dip mentality that was going on. And we're just kind of trying to figure out now, is this a short-term bounce before we get set to go lower, or is this the beginning of a significant bounce? At this moment in time, based on what we're seeing, it's still negative. But there's also the scenarios that I'll get to at the end that things could get very positive from here, or they could get very negative from here, or they could stay about the same. So that's what makes it interesting to try to figure out all these things within the market. We did have a gap higher right at the open. Things were positive after the PPI, the producer price index, came out, and that was taken as positive. Even though it was a very high number, it wasn't worse than the market had really expected. So they took that as good news. There was some initial gyration, which is very typical at the market open. And then prices were able to continue to go higher up to the daily pivot. Once we get above the daily pivot, now the day is more positive. It has more of a positive bias behind it. And then the buying continued up to R1. And we actually got right up to R1. There was a little bit of selling going into the close, but then we finished up 1.12%. One thing that is a concern is we saw below average volume and it declined from Tuesday. So anytime you see any kind of a move, especially to the upside, a higher move on lower volume, that's just something to be a little bit concerned about. We call that a warning sign or warning flag. The technicals are still negative. The big fixation right now for the markets continues to be inflation and interest rates, and then all of the other geopolitical concerns that I've been addressing over and over. Any one of those could come up to the forefront at any given time, either in a positive or negative way. So what can we say after Wednesday? The technicals remain negative. We did get back above the 50-period simple moving average, as well as the 200 exponential moving average. So that's positive. We were able to bounce up from that. And right now, I'm just taking this as a short-term oversold bounce. Now, I need more evidence. I'm not enough of a risk taker to say, oh, this is the bottom and we're just going to shoot higher from here. That may end up happening, but I just don't see it yet myself. The big story is rising interest rates having an impact on growth stocks. If they're going up, growth stocks go down. If interest rates go down, growth stocks are going up. The yield curves are no longer inverted, and that could provide a positive backdrop behind things. And again, I go into a lot more detail in the full length daily video. The dollar index, which had gotten above 100, well, it fell back slightly below 100, and sentiment is just not moving. We're not increasing in fear or greed right now. We're just kind of stopped. It's like the speedometer has stopped working. The PPI that came out was the highest number that's ever been recorded. But what we're looking at is more, how is it growing? Because the producer price index, that's what people who make products, that's what they have to pay. And if their prices go up, eventually that will come over to us as the consumers and the prices we have to pay when we go buy these things at the store. We're still in a trendless environment. The ADX is below 20, and even though it flattened out a little bit, it's not starting to turn up yet, and I'll show you that. I'm keeping the bias as negative because right now I just see this as a short-term bounce. I need more evidence to switch over and be a little bit more positive. And then our momentum for the last number of days, I'm keeping as negative as well. And this is showing us on Tuesday, 46, Wednesday, 46. It's really not changing right now. I don't know if this is just failing to move or what's happening. I looked at the date down here and it said, yeah, they did update it, but it's not moving. So we're in neutral territory. Here's the PPI, and this just shows the real strength. The one that's interesting is, and that I like to look at, is more this maroon color, because this includes food and energy. And it's like, okay, what do we need to live? We need food. We need to be able to get places. So taking that out of the overall mix, it's like, why? We can't just take that out of our lives. And I have to cough. Still dealing with that. Sorry about that. But this is seeing a real decline, up, I think it was 11.1% overall. But it was not as bad as the market had feared. And then here's our daily chart, which shows that we were able to get back above the daily pivot. That could be somewhat positive, but we have a lot of overhead resistance where we're at right now. We do have some support if we end up going lower, but there's a lot of open space right now. The ADX, even though it flattened out a bit, has not crossed above the moving average. The red line is on top, even though it did decline. It's the more powerful one right now. So we have to default to this being a negative trend. And then here's our moving average spaghetti tree. This gold line along the bottom, that's the 200-day exponential. This green line is the 200-day, or excuse me, the 50-day simple. But we've got a lot of other moving averages above where we're at right now that could end up providing resistance if we go higher. Here's our moving average rainbow. We're trying to go back up into the rainbow, if that's even possible. We are still below the 200-day simple moving average. So that means our long-term trend is weakening. And then here's the dollar, where it just went slightly above 100, now closed slightly below 100. So what's our outlook then for Thursday? The technicals are still negative, even after having a short-term bounce, one day. It wore off a few of our short-term indicators, but not very many. And now that's the question. Are we just going to bounce a little bit before we get set to go lower? The market remains in a trendless intermediate term range because our ADX is below 20. We have the daily back and forth battle between growth and value. Interest rates, whether they're going up or down, is having a real impact on stock prices. The supply chain issues still continue and may be getting even worse because of the lockdowns, even though they might be lessening some of those in China. The big economic reports coming out on Thursday are retail sales and then the preliminary consumer sentiment report. How are people feeling about things? And that could be kind of telling for what's happening because people haven't been very happy right now. And then, of course, at the bottom, under the geopolitical events, these are the same things that we've been dealing with all along. And any one of these could immediately become what the market focuses on. So what are our scenarios? To keep going down from here, if interest rates keep going up, and if we still see some inflation fears, or the market is still worried about inflation, that could keep prices going down, at least for right now. The technicals are negative. We did have a short-term bounce. Is that just to wear off the oversold condition before we get set to go lower? That's the scenario for going down. What about the scenario for going up? We do have this positive backdrop after we see the yield curves stop being inverted. And if you want, go look at the daily video or send me an email and I'll send you a chart. And it shows that after we come out of being inverted, quite often we see a pretty powerful upward move in stocks. It's kind of like from the time the yield curves are inverted until we start hitting rough economic times or actually go into a recession, that can be a really powerful move at that point. So we want to be ready if that's what is starting to happen. We are short-term oversold. Can the bounce continue? Okay, that's the big question. And then our moving averages, as well as some pivot points, may be either providing support if we go a little bit lower, but they could also be providing some resistance if we try to go higher. The current scenario that we're in right now is the sideways one because the ADX is below 20 and continues to decline. So we're seeing really choppy movements with a little bit of a slowdown in price. We're still seeing more than 1% moves, but it's the real 2 or 3% moves that we are not as likely to see with the ADX being so low. And if we do see a 2 or 3% move, the ADX is liable to move from being non-trending. So what's our conclusion? Right now, the S&P is negative. Short term, we're negative, but bouncing after becoming oversold. How long is that going to last? Or was that just a one-day wonder? Intermediate term is negative. Our oscillators are pretty much all negative across the board. There's still a couple left that haven't crossed over, but we have been able to get back above the 50 and 200 moving averages. Longer term, we are still negative because we're below the 200-day simple moving average. And then here's just a list of the other videos that you're welcome to check out. So thank you. Have a wonderful Thursday, and I'll prepare the next snapshot update after Thursday's session.